Markets. I'm your host, Anthony. You can catch the show every Monday to Friday at exactly 10:30 a.m. to 12:30 p.m. And let's now look at comparing the indices for the different stock exchanges in East Africa. An index tracks the performance, the average performance of all companies that are listed, or specific types of companies, maybe the top 20, maybe the top 25. But usually they do this as a way of looking at the overall performance without looking at each company separately. And when you look at the domestic market capitalization on the Nairobi Securities Exchange, it fell by over 21.7% to over 16.7 billion US dollars at the end of the review period, from over 21.3 billion at the end of the first quarter in 2022. When you look at the market capitalization, which was weighed down by a reduced appetite for emerging markets, driven by an increase in the interest rates on the developed markets such as the United States, which are battling high inflation, and that has forced their central banks to adjust the rates upwards. The domestic market capitalization on the Rwanda Stock Exchange grew by 2.7% to over 0.59 billion US dollars at the end of the review period, from 0.57 US dollars recorded at the close of the first quarter of 2022. The growth in the market capitalization was due to the share price gains registered on the Central Bank of Kigali and the Bralirwa PLC stocks during the quarter under review. Similarly, the domestic market capitalization at the Dar es Salaam Stock Exchange closed higher at 4.52 billion US dollars from 4.5 billion US dollars that was posted in the close of the first quarter 2022, representing a gain of over 0.4%. The growth in the market capitalization was due to the share price gains registered on the CRDB Bank PLC, public limited company, and the Dar es Salaam Stock Exchange, NMB Bank, public limited company, the Swissport Tanzania PLC, and Jatu PLC. That the rally also of the share prices can be partly attributed to investors returning to the equities market as the book closure dates for dividends approached. And then when you look at the quarterly domestic market capitalization for the regional markets, you can see how the markets have moved. 1.9 billion US dollars for Uganda, Nairobi at 16.7 billion US dollars, then 4.5 billion US dollars for the Dar es Salaam Stock Exchange, and 0.9 billion US dollars for the Rwanda Stock Exchange, meaning the Nairobi Stock Exchange comes in the first place in terms of the market capitalization, followed by the Uganda Securities Exchange. Then the Dar es Salaam Stock Exchange comes in the third place, and as well the Rwanda Stock Exchange comes in the fourth place. In terms of equity turnover at the Nairobi Securities Exchange in the second quarter of 2022 dropped by 4.7% to 233 million from 244.6 million registered in the first quarter of 2022, and this was driven by the sell-offs by foreign investors. I've told you before on the show, we still have a problem in our markets. We have a very big problem and opportunity, which of course at first looks like an opportunity, but in the end is a very big, clearly big problem when it comes to investing. And that is the influx of foreign investors. These foreign investors are very good at bringing in capital. That's a very wonderful wonderful thing to do, but the terrible mistake we make is having too much of them. And these investors, when they decide to go out of the market, you will feel the effect that actually there are foreign investors moving out because they have invested a lot of money. And much as they bring in that money, which is very good for the companies, very good for the market performance, but they do cost us a lot every time they have to go out of the market, which also still comes back to us. Now, we are seeing that there was sell-offs due to these foreign institutional investors. The global uncertainties such as the high inflation, partially fueled by Russia's military actions in Ukraine. Frontier markets such as Kenya have taken deeper hits because investors, particularly foreigners, are attracted to the Western bonds and equities that are viewed as safe havens in times of global uncertainties. Equity turnovers at the Rwanda Stock Exchange for the second quarter of 2022 dropped to $3.7 million from $14.6 million recorded in the first quarter of 2021. The decrease in the turnover on the Rwanda Stock Exchange can be partially attributed to low domestic foreign institutional investor activity. That said, the turnover at the Dar es Salaam Stock Exchange increased by 15.3% to over 17.5 million United States dollars from 15.2 million United States dollars that was recorded in the first quarter of the period ended 2022. When you look at the trends in the index levels, the Nairobi Securities Exchange All Share Index shed off 20.1% to close the second quarter at 717 points, while that was from the 897 points in the first quarter. And on the other hand, Rwanda Stock Exchange Share Index gained by 6.6% to close the review period at 995 points from 939 points at the end of the first quarter of 2022. In the same breath, the Dar es Salaam Stock Exchange Tanzania Share Index grew by 1.6%, closing the review period at 1,075 points from 1,059 points at the end of the first quarter of 2022. The changes in the index are mirrored the changes in the domestic market capitalization with similar drivers. And the graphs there just show you the index performances for the different the different benchmark indices for USE, Rwanda Stock Exchange, Dar es Salaam, and the Nairobi Stock Exchange. That definitely brings us to the end of that analysis. But on the outlook, the Capital Markets Authority says that the June 2022 World Bank Global Economic Prospects report notes that growth in the sub-Saharan African is projected to decelerate from 4.2% in 2021 to 3.7% in 2022, as of course high inflation rates and policy tightening weakened domestic demand. The report states that the growth deceleration in major trading partners is compounding these headwinds. It also further indicates that growth is projected to firm slightly to an average of over 3.9% in 2023-2024. Assuming further progress with pandemic containment, favorable terms of trade in the commodity exporters, and a gradual easing of the global food pressures, the World Bank says definitely this will be realized. However, there are downside risks surrounding the outlook, with much uncertainty emanating from Russia's invasion of Ukraine. In addition, a further disruption of global supplies of staple crops could lead to even higher food prices within the sub-Saharan Africa and increased spending in the food inputs. The central bank indicates that the economic activity is projected to remain modest as the shocks of commodity prices and production and distribution disruptions and global inflation continue to dim the prospects for the domestic economic growth. It further notes that the economic growth is projected in the range of 4.5% to about 5% in 2022, and rising slightly to 5.5% in 2023, in part supported by public investments. The risks to the growth outlook, which are tilted to the downside, includes the weaker global growth, escalation of geopolitical conflicts, heightened global economic uncertainty, and higher inflation. Other downside risks include a further decline in the consumer confidence, heightened by exchange rate volatility, and weakening investor sentiment. Nonetheless, in the medium term, the economy is projected to grow in the range of 6.5% to 7%, supported by public and private investments in the oil sector. Going forward, the implication of these projections on the capital markets. The capital markets are projected to be weighed down by a reduced appetite for frontier markets, driven by an increase in the interest rates in the developed markets such as the United States of America. Frontier markets such as Uganda might take huge hits because investors, particularly foreign investors, get attracted to the Western bonds and equities that are viewed as safe havens in times of global uncertainty. In addition, the appreciation of the dollar against global currencies, including the Ugandan shilling, the Kenyan shilling, coupled with the imported inflationary pressure in Uganda, fueled by the increase into the local market, increase in the price of crude oil, and global supply chain constraints could also reduce the inflows into the local market. On a positive note, the market remains upbeat with the expected listing of Airtel Uganda and Laika Mobile in the not so distant future. Definitely, we are looking forward to that. And of course, the report ends with the list of, you can find the list of the different licensed persons within the capital markets. You're looking at investment advisors, you're looking at stock exchanges, you're looking at securities central depositories, you're looking at stock brokers, and so many others, and other CIS managers as well that you might be interested in contacting just in case. That brings us to the end of that report. Thank you very much. You're still a wonderful viewer. And right now, as we wind up the show, we would like to just look at these particular stock performances from yesterday. As I mentioned, only 5 equities participated in the trades yesterday, and that was looking at the list here. We had Stanbic Bank, we had Cipla, we also had Stanbic Bank of Baroda, Uganda, who had the highest volume, and we had MTN Uganda. Now, when we look at Umeme recorded the highest volume, and that was after trading 583,300 shares yesterday, followed by Bank of Baroda, Uganda, who traded over 353,400 shares. MTN Uganda traded a total of 34,200 shares, whereas Stanbic Bank Uganda traded up to 6,900 shares. Regarding the performance of the all-share index yesterday, the all-share index, the benchmark index, went down by 1.18 points, but that is a 0.09% daily loss in points to close at exactly 1,276.78 points, representing the 1 week loss still of 1.53% and a 4-week loss of 2.38% and an overall year-to-date loss of 10.13%. The local company index, USE local company index, also decreased by 1.18 points, 1.18% to 269.79 points, making it still a 1 week loss of 2.97%. And definitely that gives you a picture of what happened. Let's peer into Nairobi. Nairobi, definitely there was excitement yesterday after the court ruled that Mr. President now elect Ruto was supposed to be sworn in as the next president of the Kenyan Republic. Of course, after court ruled out any disparities that could have been reported by Mr. Raila Odinga and his team. And so we are looking at also in the capital markets world a return to sanity on the market, with the markets performing extremely well. You can see yesterday alone we had 47 Nairobi Security Exchange listed equities participate in the trading, ending the day with 22 gainers and 14 losers. Longhorn Publishers led the gainers at 8.17% share price appreciation, followed by Total Kenya, who gained by 6.44%, and Nairobi Business Ventures, who gained by 5.97%. Whereas East African Cables gained at 5.26%. On the losing side, however, we had the East African Portland Cement, who was yesterday's top gainer, lose by over 8.33%, down to 7.7 Kenyan shillings yesterday alone, followed by Kapchora Tea Company at 6.65% loss as well. The Trans-Century company also lost by 6.56%, whereas Kabaseed Investments lost by 6.05%. Cooperative Bank of Kenya this time sold the highest shares at over 7.68 million shares that were traded, and followed by Safaricom, who came in the second place in terms of traded volumes at exactly 4.28 million shares that were traded. And KCB Bank came in at the third place at a 2.49 million shares that were traded, whereas Equity Group Holdings came at a 1.47 million shares that were traded. Regarding the Nairobi Securities Exchange indices, the all-share index, benchmark index, increased by 2.68 points. That was a 1.94% increase in the points to close at exactly 140.69 points, representing a 1 week gain of 1.76%. Ladies and gentlemen, there you have it. That was the stock performance for Nairobi and Uganda. You can get in touch with your stockbroker. It's never too late. By first of all getting into the SCD account or the Security Central Depository to see that you open yourself the account. It's free of charge, 100% free of charge, and by simply dialing *165*57# you can be able to open yourself an SCD account where you can put or deposit your instruments after buying them, and this is absolutely free of charge. It comes at no cost, but definitely after opening the account you can get in touch with one of the stockbrokers. These Stanbic Bank, Standard Bank Group Securities, there's Crested Capital, UAP Stock Brokerage, Dyer and Blair, and so many others. And so you can get in touch with them and get yourself some stock. Remember, saving is good, but saving with investment is much better. I'll catch you tomorrow, same place, same time. Bye for now.